So today's topic for revision is depreciation. So what is depreciation in simple terms? Tell me.
The degradation of the value of an asset.
Correct. So when there is some sort of reduction in the value of asset. What type of asset?
Tangible.
Tangible, correct. So here we are talking about tangible assets. So when there's a reduction in the value of asset, that is tangible assets. Good evening, everybody. We are starting with the revision on depreciation. We are just discussing the meaning of depreciation. Skanda just told me that when there is a degradation in the value of a tangible asset, we call it as depreciation. Here, the depreciation is, there are certain characteristics that you have to understand of depreciation. What are they? They are like when depreciation is charged, the book value of the asset would be reduced over a period of time. You are trying to actually allocate the cost of the tangible asset over what? Over its
Expected
yes, life.
expected life, yeah.
Expected useful life of the asset. Now, this depreciation has to be provided every year. So, to be provided every year. Why? Because whether you use it or not, even with passage of time, the value of the asset is going to go down. A very good example is like if you are buying a car, you're paying maybe 6 or 10 lakhs for that car. So we'll take a medium sized car, 6 lakh you're paying for that car. As soon as you drive it out from the showroom, immediately also if in one day you are trying to sell it, you will not be able to sell it for 6 lakh. You will have to sell it at lower value because of passage of time. If you bring it, keep it in your garage for 1 month and then try to sell also, you will not be able to sell it same 6 lakh. The value of the asset falls, it depreciates. Why? Because of passage of time. Got that?
Yeah.
So because of passage of time, because of use, the different reasons because of which these fixed tangible assets depreciate. And it is basically a gradual decrease in the value of the asset. It is not that sudden drop in the value. Gradually the value is getting reduced. There, and here, how are we going to treat this depreciation? Depreciation is a what type of expense? Non-cash expense. Very good. Non-cash means there is no outflow of cash. It's just that asset value is getting reduced and equivalent amount is being debited to profit and loss account. Unlike other expenses, like salary or rent, you have to pay. Money will go out. Here, money doesn't go out. But in computation of profit, it will get reduced. You have to understand that depreciation is charged on fixed tangible assets. So, there are other types of assets also. You have intangible assets. So, an intangible asset, whatever is a reduction over its estimated useful life, what is the term that is used? Like for tangible assets, we say it is depreciated. Depreciation is the term. For intangible assets, what is the term used? Correct. Very good. Amortization. That is the exact term for intangible assets. For wasting assets, do you know what is wasting assets?
Yeah.
For example, at least, of wasting asset.
Is it like oil refinery?
Yes. Mines and quarries, refineries, yes. because there are basically the minerals, whatever is there is getting extracted. Your oil refinery, your oil is getting exhausted from there. That is called as wasting asset. And for wasting asset, what is the term used? For tangible asset depreciation, intangible amortization. For wasting asset, the term used is any idea? It's depletion. Depletion of asset. The asset is getting depleted. Got that term?
Yeah, yeah.
Other than that, one more point. We have already said it's a non-cash expense. There is no outflow of cash. But being an expense, where will you put it? Into the profit and loss account. So what type of expense it is? It's
Indirect.
an indirect expense. Very good. So these are some points that you have to remember related to depreciation, because when you get MCQs, you can get MCQs from these point of view. Now, can we go to the next? People have noted this down.
Yeah.
Others?
Yes,
Rashish?
ma'am.
Yeah. Rashish, you there?
Yeah,
Noted?
yeah.
Now, next thing about depreciation that I will discuss is the causes of depreciation. Why depreciation takes place, the different causes. One is because you use it. So usage of that asset. As you use it, because of the wear and tear, like if it's a machinery, you're using it, you're running it, it gets depreciated. If it's a furniture, you're sitting on it and becomes old. So that is one cause of depreciation. Second one, you call it as efflux of time. Efflux of time means what? Simple word, passage of time. As the time passes, it becomes older. For example, your building, it becomes old. It does not remain the same. Your machinery, you buy, you're using it. What happens? It becomes old. So because even if you don't use it, you keep it somewhere closed place also, it will become old. So because of passage of time, depreciation is caused. And all these fixed tangible assets we're talking about now, they have a definite life. Like for the machinery, you can estimate that this machinery will be usable for next 10 years. You can estimate. Beyond that, you cannot guarantee whether it is usable. Of course, if you misuse it from the beginning, it might break down in 4 to 5 years also. But if used properly with proper regular maintenance, 10 years is a useful life. So that is the next point. After that, there's a term called as obsolescence. What do you know about obsolescence? What does it mean? Simple terms. Any idea?
It's like when it can't be used anymore.
Correct.
It's like outdated.
Probably correct. It becomes outdated. New technology comes in. So this technology becomes outdated. If you continue to use it, you will produce something which will not be saleable. People will not buy it. You cannot continue using a particular thing. Like a computer, you have to keep updating. You cannot say that whatever about 25 years ago, you'll use it now also. Not possible. There will be problems. You'll have to keep updating. And certain updates cannot be put on the old machines. So that way you have to replace them. So the value of that old machine or old computer will be reduced. So that is obsolescence. Very good. Then one more they have given, that is accidents. Now, here all these are the general causes, and this causes fall in the value of asset, which is gradual. But in outdated, it can become outdated suddenly also, because suddenly some new technology is being uh, invented by some person, it becomes outdated. But accidents are like sudden, and there is a permanent fall. Like suddenly there is a fire, the machinery is totally burnt out. Then it is totally gone. So it's a permanent one, and it is not gradual like what we were saying here. Okay, so these two are gradual, continuous. These two are sudden. Got it?
Yeah, yeah,
Now, the cause of depreciation clear to everybody? I'll move on to the next.
yeah.
Have any doubt? Please feel free to ask. Next, why do we provide for it? Objective of providing depreciation. Why would we want to provide depreciation? Any idea?
To know the proper value of the asset.
Correct. So we want to show the true and fair view of the financial position. Means, as Skanda said, we want to know the value of the correct value of the asset. Only when you provide proper depreciation to it, the value reflected in the balance sheet will be correct, and you will get a true and fair view of the financial position. One more is to determine correct amount of
Profit.
right profit or loss. So if you don't provide depreciation, your profit or loss that you calculate in the profit loss count is not the correct amount. It will be wrong because you're using the machinery. The machinery usage is resulting in that revenue. Therefore, if you don't account for it, then that will be wrong. You want to know the correct cost of production. So in producing, you're using material, you're using laborers and paying wages for them, you're incurring several other expenses. But at the same time, for the production process, you're using that machinery, using that building. All those are being used, and the value of those assets are falling because of the usage. So that usage is depreciation, and if you don't provide for that and add it to cost of production, your cost of production would not be the correct value of cost of production. Got it?
Yeah, yeah.
Then to provide funds for replacement. Now you have purchased a machinery of say 10 lakhs now. It has useful life of 5 years. As you're providing, there is no outflow of cash at all during those 5 years. It is a non-cash expense. So amount from the net profit, whatever is there, it is getting accumulated somewhere in the business. So that way you will be able to get the required amount accumulated, and you'll be able to use it. At the end of the useful life of this asset, you have to buy a new asset. So you will have funds available to purchase a new asset. Got that?
Yeah,
There are some methods also, sinking fund investment method and all there of depreciation, where amount is actually taken out as it is reduced in form of depreciation, is taken out and invested outside somewhere to get money available, kept ready, and it can that investment can be sold off and money would be available for replacement. And finally, one more point, which is objective, is to comply with legal provision. Means under the Income Tax Act, under the Companies Act, providing depreciation on the fixed tangible asset is necessary. Both of these acts have specified rates at which assets have to be depreciated, different assets have to be depreciated. Got it?
Yes, ma'am.
This was the objective. Now moving on, one more point that you have to understand in respect of depreciation is the cost of that asset. Now, what all is included in the cost?
installation charges.
Correct. to the purchase price. What do you pay? You have to add the installation charges. Anything else? Any freight you pay to get that particular item to your place?
Transportation, yeah, transportation fees
Correct.
and all.
Freight, carriage, or transportation. So that you understand that when you purchase an asset, you have to bring it to your place, you have to get it installed. So while transporting, you have to pay the transporter, you have to pay the engineer who is going to be installing it. So all that has to get added up to find the value of that asset. Clear? My question, will GST be part of the cost?
I don't think so.
No, correct. No. Because when you pay GST to purchase an asset, it will go into input GST account, say GST, SGST, IGST. And that you would use to set off against the output GST that you have collected. So when you are using it there, you cannot use it again here, add and take depreciation on it. And that is why GST will not be part of the cost. Next question. Will the interest on amount borrowed to finance an asset be included in the cost? What do you think? It is no. It is a finance cost. It should not be included in the cost of an asset. Got it?
Yeah, yeah.
Then other cost that would be included in the cost of an asset would be if you make some repairs which increases the productivity or the life of that asset gets extended, then that particular repairs cost has to be capitalized, means it should be included in the cost. Like for example, there's a machinery. By adding one component to the existing machinery, if you'll be able to produce 10,000 units more, or by adding the component, your useful life of the asset gets extended by 2 more years, then in that case, that whatever you incur as repair expense on the component getting it fixed has to be added to the cost of the asset. Got it? Clear, everybody?
Yeah, yeah.
One more thing, if by doing that particular tweaking in the machinery, if it improves the quality of the product also, you would have to add it to the cost of that asset. Further, if an old asset is purchased as say second hand, and then you do some reconditioning on it, like if you purchase an old building, what will you do? You will have to clean it up, do some repairs on it, whitewash it and all that. That is reconditioning. Or you purchase second-hand machinery which is being lying idle there. You purchase it, you cannot use it immediately. You have to do servicing, make some changes in that machinery, add some components, replace some components and all that, and then it becomes usable. So that is reconditioning. So at that point of time, whatever is the cost incurred will be added to the cost of that asset to its purchase price. Clear?
Yeah, yeah.
So that's it with the cost part. Any doubt in this?
No.
No. Okay. Now we will go into the sums. There are two ways in which the depreciation can be charged. One through the asset account. Okay. The other is by creating a separate provision for depreciation or accumulated depreciation account. So first method is depreciation is credited to asset account. So how would that be? There's an asset. You would have the purchase here. Whenever you purchase, you incur some expense on that purchase immediately, that is also added to it. Then at the year end, suppose it is purchased on 1st April 2021, on 31st March 2022, first thing you have to provide is depreciation. So that is going through the asset account, and then you would have the balance carried down. This is how it would be. Got that?
Yeah.
And in the balance sheet, how would we show it? We would show on the asset side the asset less depreciation. This asset value minus depreciation. So this net value would be shown here. Got that? Is the presentation clear? Now, the second method is where you maintain provision for depreciation account. So in that case, what happens? There is two accounts maintained. One is the asset account. In the asset account, only the purchase and sale would come to cash or bank account for the purchases, and you would have a separate account called as provision for depreciation account. So what happens here on 1st April 2021, you would have purchase, and then the depreciation when you charge would be 31st March 2022. You write depreciation here, not in the credit side of the asset account, but credit side of provision for depreciation account. And the asset account would get closed out. Whereas provision for depreciation would be closed out and the balance would be carried down here. So from this, what do you see? That asset is always carried at cost, and the depreciation is accumulated in the provision for depreciation account. Clear?
Yeah.
Others clear? Suraj and Ashish, clear?
Yes, ma'am.
Ashish, is there?
Yeah.
In balance sheet, how is it shown? In balance sheet, on the asset side, you would have the cost of that asset. That is the original cost that you have here. Less, you will write provision for depreciation account. Every year depreciation is being transferred here to this account, and the total would be here. This amount would be written there. In the outer column, you will have the net balance. So, in the first method, the depreciation for each year would be reduced here. Whatever is the current year depreciation only, and this would be the written down value. There is reduced value, cost minus depreciation every year. And the current year depreciation will be subtracted and the balance will be written here. But in this method, cost is taken here, and whatever depreciation so far which has been charged till the end of the current year, that is including this depreciation, would be here. Net amount will be written here. this final amount would be the same. That would not differ. Only inner values would be different in the presentation. Clear?
Yeah.
Now, moving on, we will go into the different methods of providing depreciation. What are the two methods of providing depreciation?
Straight line method and written down value method.
Straight line method and WDV, or is there any other name for straight line method? Do you know?
Uh, WDV, I know diminishing value method.
Diminishing value method, reducing balance method. For SLM, you have original cost or fixed percentage method also. Okay. The important thing that you have to know is, first we'll take up straight line method, understand it. Here in the straight line method, we calculate depreciation once like this. We take the cost of the asset, we subtract the scrap value or the residual value which we expect to get by selling the item as scrap at the end of the useful life of the asset, divided by the estimated useful life of the asset. So this is how we'll calculate the depreciation for it. And this amount of depreciation is going to be constant year after year. Same amount of depreciation will be charged. So suppose the value of an asset is 1,10,000. You expect 10,000 as a scrap value at the end of its useful life, and 10 years is the useful life. Then 10,000 is the amount of depreciation which has to be provided for every year for the next 10 years. So that at the end of 10 years, only 10,000 would be left, which would be the scrap value. Got that?
Yeah, yeah.
And if they ask you to calculate the rate of depreciation, what is the formula? You take the depreciation amount divided by the total cost of asset into 100. That will give you the rate of depreciation. Got it?
Yeah.
Relatively, straight line method is a very simple method. At the beginning of the year, first year, you calculate the depreciation, get the full year depreciation, you can put the same amount every year. Only thing is that in the year of acquisition, the year in which you purchased it, and in the year in which you sell it, you might have to calculate for the proportionate period. Means, suppose you purchased the machinery on, say, 1st of October. So it was there from 1st of October till 31st March. So only for 6 months. At that point of time, you calculate depreciation and provide only half of it in the first year. In second year onwards, you will calculate and provide for whole year. Got it?
Yeah, yeah.
Now in the fourth year, suppose you sold it off. Okay? Sold the asset at on say 1st of July. So it was there from 1st April to 1st of July. So April, May, June, 3 months. So you can provide only for 3 months. That is 10,000 divided by 4. That is 2,500. So only in the year of sale you can provide for 3 months 2,500. So all the years amount would be same for the entire year usage. Only in the year of acquisition and the year of sale you have to be careful to see when it was acquired or when it was sold, and then calculate and provide for depreciation. This is a place where you can make a mistake. Clear?
Yeah, yeah.
Then what else about this depreciation method? It's a very easy method, but there are certain limitations also of this method. Like here we are assuming that every year it is going to get depreciated at the same amount, which seems to be unrealistic. Because in some years you might be using it more, some years less. You're not taking into consideration the usage, and initially the asset might be used more, in between it might not be used much, and later years comparison your usage in the earlier years might be more. That and all is not being considered. And also sometimes because of this method, what happens at the end of 10 years, only the scrap value is left. And if there was no scrap value, we would have written it off. That 1 lakh 10,000 would have been written off at 11,000 every year. And at the end of 10th year, the value would have become zero in the books. But actually, physically, that particular asset might still be lying in the factor premises and still usable, having some value and life in it. So that point of time, you are not showing that asset at all in the balance sheet. You have thrown it out of the asset by depreciating it over the estimated useful life. So that is the limitation that you have of the straight line method. Clear? Any doubts?
No, ma'am.
So I will send one question. We will do that. Simple one we'll take first. There should be sale value wala lung ki simple one. Okay, let's. Those who have the question, backside question number 5 from T.S. Grewal. I'm sending the question to the group. Look at that question. On 1st April 2018. You got the question? Is it visible to all of you?
Yeah.
1st April 2018, furniture costing 55,000 was purchased. It is estimated that its life is 10 years, at the end of which it will be sold for 5,000. So, cost is how much?
55 plus that amount.
5,000. What is the scrap value?
Uh,
At the end of which it will be sold for 5,000.
5,000.
That is the estimated scrap value. And useful life is 10 years. That's what we have to grab from the sentence. Now, additions are made on 1st April 2000. This was on 1st April 2018. Then on 1st April 2019 and 1st October 21. In these two dates, some additions were made. One, 9,500 here and 8,400 here. Residual value they have given, residual or scrap value is 500 and 400 respectively. Now show the furniture account for the first 4 years if depreciation is written off according to straight line method. Okay, so let's start. Prepare the furniture account. Date, particulars, amount. We will prepare for 4 years, so make it a little bit bigger. So furniture account. Now we start. First one is 2018 April 1st to cash or bank account. There is a purchase for 55,000. Now, next transaction is on 1st April 2019. So this year there is no other transaction. So we have to go to the year end, that is 2019, March 31st. Entry is depreciation account debit to furniture account. So it will be by depreciation account. How much? For that, we'll use these details. 55,000, scrap value 5,000, useful life 10 years. So amount of depreciation would be cost of the asset minus scrap value divided by 10 years. 50,000 by 5, 5,000. So 5,000 is the amount of depreciation in the first year. Clear?
Yeah.
Suraj, Rashish?
Yes, ma'am.
So that's it in the first year. So we can close that account. 55,000. 55,000. Right, by balance carry down. 50,000 would be the value carried forward. So we will write it here. 2019 April 1st to balance brought down 50,000. So first year we have completed. Now, further they said additions were made on 1st April 2019 and we are in 1st April 2019. So there is an addition to cash or bank account. How much was the addition? 9,500. Now we'll calculate depreciation. The value of that asset was 9,500, but they had given that residual value in bracket they given 500 and 400 respectively. So for the first asset it is 500, for the other asset it is 400 divided by the useful life. What is the useful life? Over the next 10 years only we'll have to take. It's furniture, na? So 9,000 divided by 10, 900. So the depreciation we have to provide in 2020 March 31st. It was added on 1st April. So entire year you can charge depreciation. So by depreciation account, we will be providing for this particular asset 5,000 and for the second asset 900. Total 5,900. That is the depreciation of the second year. Clear? So, clear everybody?
Yes, ma'am.
Ashish, clear?
Yeah.
So 9 plus 6 will be 15. 1, 6, 3, 53,600 would be the balance of that furniture, which will be carried forward to next year. So 2020 April 1st to balance brought down 53,600. Then after that, now this year, third year, is from 1st April 2020 till 31st March 2021. Now, when was addition? 1st of October 2021. So it is not during the current year. So this year, only directly we go to the year end and provide for the depreciation by depreciation account. There are two machineries and both of them used for the entire year. So 5,000 plus 900, 5,900 you charge depreciation. And then you close this account. Is it clear? Third year. So write by balance carried down 16 1 6 13 1 47 400. So now we come to the fourth year 2021 April 1st to balance brought down 47 700. Now in this year on 1st October there was a purchase of 8400. So October 1st to cash or bank account you will write the addition of 8400. Now when you calculate, you have to go to the year end and provide for depreciation. Now this time there is going to be three amounts because there are three items. One, the original one 5000 plus 900. Now on the addition made, let's calculate. The depreciation would be 8400 being the cost. What is the scrap value? Residual values are 400. Over its useful life, 10 years. So 800. But 800 is for how many? 12 months. Correct? But when was it purchased? October 1st. So we will charge depreciation from 1st October till 31st March. How many months? How many months? Purchased on 1st of October 2021.
Ma'am, 6 months.
Correct. From 1st October 2021 to 31st March 2022. October, November, December, January, February, March. So it is 6 months. Very good. So 400 rupees should be the depreciation charge for this third item of furniture. 400. So 5900 plus 400, 6300 would be the amount of depreciation. Nothing else is left. We can close the account. 0, 0, 11, 16, 56, 100, 11, 1, 7, 1, 4. So by balance carried down 49, 800. This is the value of the furniture as on 31st March 2022. Got it? Any doubts in this? Clear? Any doubt?
No, ma'am.
So shall we go to the next question? Once done, let me know. I'll send the next question. We can start off with that. Done? Can we go to the next question?
Yes, ma'am.
Ashish done?
Yeah.
Oh. Chanda done now? Is not there? Okay, fine. So now the next question is, if you have the textbook, it is a 10th question from the backside question of T.S. Garibal. Otherwise, I've sent it in the group. Look at that question. It is, a van was purchased on 1st April 2019. So you purchased a van on 1st April 2019 for 60,000 and 5,000 was spent on its repair and registration. So that has to be added to the cost of the asset. Then on 1st October 2020, this is van 1. Then on 1st October 2020, another van was purchased for 70,000. On 1st April 2021, the first van which was purchased, that is van 1, was sold for sale value 45,000. And a new van costing 1,70,000 was purchased on same date. So van 1 was sold and van 3 was purchased for 1,70,000. Show the van account from 1st April 2020 to 2021-22 means 2019-20, 2020-21, 2021-22. 3 years van account has to be prepared. On the basis of straight line method, in the rate of depreciation charged, so depreciation SLM method at the rate of 10% per annum. Assume that the books are closed on 31st March. Chalo, come on. Let's prepare the van account. Prepare the format. Date, particulars, amount. Date, particulars, and amount. Prepare for the entire page because there is 3 years and there's a sale as well. Van account. So we start with 2019 April 1st. There was a van purchased to cash or bank account. It is van 1 V1, that is 60,000, and again money was paid for registration. So expenses, that is also capitalized. We're writing it there, 5,000. Now, next transaction is directly on 1st October 2020. Now this year is from 1st April 2019 till 31st March 2020. So in this year there is no other transaction. So we will go to the year end. That is 2020 March 31st. We have to provide depreciation on van 1. When was it purchased? 1st April 2019. So purchased on 1st April 2019 means it was there entire year. So 65,000 is the cost and the rate is 10%, correct? Per annum. So depreciation to be provided is being used for entire year is 6,500. So write 6,500 like this. Then that year there is no other transaction, so we can close the account, van account, 65,000. So 0, 0, 5, 10, 1, 7, 7 plus 8, 15, 1, 58,500 is the balance carried down, which will come to 2020 April 1st as to balance brought down 58,500. Is the first year clear? So far clear? First year?
Yes, ma'am.
Now, after the first year, now we have to look at this purchase of van 2. We have dealt with this. Now this purchase. This happened. Van 2 was purchased on 1st of October 2020. And the year is from 1st April 2020 till 31st March 2021. So this is the year of purchase. So write October 1st to bank account. You would have van 2, sorry. How much is the value? 70,000. Nah? 70,000. Now, what we have to do is check whether there is any other transaction. Next transaction is on 1st April 2021. That is next year. So this year, what we have to do is go to the year end 2021, March 31st. First, provide the depreciation. What would be the depreciation? We have to provide on van 1 and van 2. Van 1 was there entire year. We are following straight line method. So what should be the depreciation on van 1? Who can tell me? What should be the value of depreciation to be charged on van 1?
6,500 only.
Correct. Because it was used entire year. For the second van, now we have to calculate. So can you calculate for van 2? This is van 1. Van 2 cost is 70,000 at 10% is 7,000. So shall we charge 7,000 depreciation for van 2?
Ma'am, it was bought in October, so shouldn't we do it for 6?
Correct, very good. So it was purchased on 1st October 2021. Therefore, it was there only for 6 months. So first year you have to charge only half the amount of depreciation. So it would be 3,500 to be charged. Excellent. So what is the depreciation to be charged in the total is 10,000 in the second year. Got that, everybody?
Yes, ma'am.
Very good. Now we have to close the account. So write by balance carried down. Now we will split it up and only write van 1, van 2. Van 1 was 58,500 minus 6,500. 52,000. Van 2 is 70,000 minus 3,500, 66,500. So total, if you see, 0,058, 1,18,500. If you total now, it would be the same. 500, 8, 1,28,500, 1,28,500. This way you close it. Here. Is the second year calculations clear?
Yes, ma'am.
As we move further, in the third year, there is a transaction of selling of van 1 for 45 and purchase of van 3 for 1,70,000. So write down the value here. 20, what was the year? 2021. April 1st. To balance brought down. Van 1 was 52,000. Van 2 was 66,500. So 1,18,500. Now, when was the van 1 sold? On 1st April 2019, on 1st April 2021, the first van purchased on 1st April 2018 was sold. So, at the beginning of the year only van 1 was sold. So, there is no depreciation to be charged. If it was sold in between the year, then you should have charged first depreciation on it from 1st April till the date of sale and then found out the profit or loss. But here, on first day only you sold off the van 1. So, you are getting money on it. So, write April 1st, 2021 by bank account. You are getting amount of 45,000. What was the value of that van? 52,000. You were able to sell it for 45. So, is it a gain or a loss? The value of van 1 is 52,000. It was sold for 45,000.
Now it will be mostly loss on sale.
Correct. Because in your books you are saying that value of van 1 is 52,000. But when you sold it, that buyer is paying you only 45. You're not getting 52, you're getting lesser amount. So it's a loss. So loss means it is to be debited to profit and loss account. So write by profit and loss account, loss on sale, 7,000. How? 52,000 minus 45,000. Got it?
Yes, ma'am.
Rashish, clear so far?
Yeah.
And then they further said, and a new one costing 1,70,000 was purchased on same date. So, what is the same date? April 1st. So, April 1st, you purchased one more van that will name as van 3 for 1,70,000. Done. Now, there is no other transaction. We have to provide depreciation at the end of the year. So, we have to go to the year end, that is 2022, March 31st, by depreciation account. Now, on which vans should we provide depreciation? Who can tell me? There are 3 vans, van 1, van 2, van 3 in this question. So, this year, on which vans are we going to provide depreciation? Will we provide on van 1?
I'm only 2 and 3.
Correct. Why not on 1?
Ma'am, we sold it.
Correct. Very good. It is sold off. It's no more your asset. So have that clarity and remember you have to provide on van 2 and 3. Van 2, we know Depreciation we have calculated here before. Whole year 7,000. First year we have taken 3,500. So we should take here for whole year. So 7,000. For the van 3, 1,70,000 cost at the rate of 10% would be 17,000 and was purchased on 1st April. So entire year. So 17,000 would be the amount of depreciation. So total 24,000 in this year is a depreciation charged. Clear? Then we write by balance carried down. We'll split it up and keep it so that in the future years it will be useful that way. As we're keeping it like that. Now here van 2 value was 66,500 minus 7,000. That would be 59,000. No, not 59,000. How much would it be? 59,500? 66,500 minus 7,000 would be 59,500. And 1,70,000 minus 70,000 would be 1,53,000. So 2,12,500 is the value of the van at the end of the 3rd year. Got that? Any doubts?
No, ma'am.
If you total this, you will see it is 2,88,500. So this is how when multiple assets are given and there's purchase and sale of it, you split it up. Machinery 1, machinery 2, machinery 3, van 1, van 2, van 3. And take each one of them, see when it is purchased, when it is sold to calculate the depreciation. What is the sale value? Compare the sale value with the book value on the date of sale. In this example, if you see it was sold on 1st April, so no further depreciation. Suppose this particular van was sold on 1st October. Then first you have to provide depreciation on van 1 from 1st April till 1st October, that is for 6 months, and then the value at the beginning minus the depreciation would be the book value, which has to be compared with the sale value. Getting that?
Yes, ma'am.
Done?
Yes, ma'am.
Rashish, done?
Yeah.
Good. Now, I've sent one more question we will do on straighten method. Here, we are not maintaining just asset account, we are maintaining provision for depreciation account as well. Look at that question. In the textbook, it is backside 15th question. Following balances appear in the books of Priyank brothers. On 1st April 2020, machinery account balance was 20 lakh, and the provision for depreciation account had a balance of 8 lakh. On 1st April 2020, they decided to sell a machine for 5 lakh. This machine was purchased for 7 lakh 50 on 1st April 2017. Prepare the machinery account and provision for depreciation account for the year ended 31st March 2021, assuming that the firm had been charging depreciation at 10% per annum on straight line method. So, here for this question, prepare two accounts. One is the machinery account, 1st April, and it was 2020 balance given. So, let's prepare the machinery account here, date, particulars, amount. Date, particulars, amount. Debit, credit. This is the machinery account. And we'll prepare here the provision for depreciation account. Date, particulars, amount, date, particulars, and amount. Provision for depreciation account. Now, let's start. Ready?
Yes, ma'am.
So they have given us the balances. Let's first write the balance. On 1st April 2020. So 2020, April 1st. Machinery account had a balance of 20 lakh. Machinery is an asset account. So the balance is written here to balance brought down 20 lakhs. And provision for depreciation account has 8 lakh. Provision for depreciation account has credit balance. So 2020 April 1st by balance brought down 8 lakhs. Now, on 1st April 2020, they decided to sell a machine for 5 lakh. So, there is a sale of machinery. What is the sale value? 5 lakh rupees. Then they said this machine was purchased for 7 lakh 50. What was the cost of the machinery? It was purchased on 1st April 2017 for rupees 7 lakh 50,000. And the depreciation is being provided on machinery at 10% straight line method. Now, using this, we have the cost. We don't know what is the depreciation so far charged till the date of sale. When was it sold? On 1st April 2020. So, from 1st April 2017 till 1st April 2020, the machine was used and the depreciation has to be charged on it till then. So, let's calculate the amount of depreciation. So, amount of depreciation for each year would be how much? Cost. There is no scrap value. They have given the rate of depreciation, so 10%. So, you get 75,000 per year. How many years? From 1st April 2017 to 1st of April 2020. How many years? 17, 18, 18, 19, 19, 20. That is 3 years. Did you all get that?
Yes, ma'am.
So what is the total depreciation charge so far? 75,000 per year into 3. 2,25,000. Got it?
Yes, ma'am.
Note this down. Then further, we will go further. Done writing?
Yes, ma'am.
Now, with these available amounts, we will find out what is the book value on date of sale. We know the cost was 7,50,000 and so far depreciation charge on it is 2,25,000. So, cost is 7,50,000 and accumulated depreciation is 2,25,000. So, what is the value, book value on date of sale? 5,25,000. And it was sold for how much? 5 lakh rupees. So in our books, the asset is at 5,25,000, but we were able to sell it for 5 lakh. So what is the 25,000? Gain or loss on sale?
Profit. It's uh, wait.
Something worth 5,25,000. If you sell for 5 lakh, it's a loss on sale. If the sale value is more, then that is a gain. Okay? Clear?
Yes, ma'am.
So now we'll incorporate these details. Now, what was the depreciation? 2,25,000. So where is it included? In this 8 lakh. As the asset is being sold, it has to be removed. So we go to the year end, March 31st. We are going to transfer it to the machinery account, 2,25,000. We're removing that depreciation. So what happens here? The effect would come here. 2021 March 31st, you will bring from there, put it here, a provision for depreciation, sir. Provision for depreciation account, 2,25,000. So cost is included here and the depreciation for those 3 years is included here. Now record the sale value, which is 5 lakh, and record the loss on sale 25,000. So see, the total is 7,50,000. The cost which was included here got removed. 2,25,000 in the form of depreciation for 3 years, 5 lakh in the form of sale value that you realize by selling it, and 25,000 in the form of loss. Clear?
Yes.
Now, after doing this, we are supposed to provide depreciation on the rest of the machine. This 20 lakh was the cost of all the machine together. Out of that, only the machinery worth 7,50,000 was sold. So there is still other machineries now. So on that, we have to provide depreciation. So we will not write it here. Where will we write it? Here. Depreciation is put into 2021 March 31st by depreciation account. So from the total cost of machine was 20 lakhs. Out of that, cost of machinery sold is how much? 7,50,000. So what is the cost of remaining machinery? Subtract this. 12,50,000. What is the depreciation percentage? 10% SLM. So 1,25,000 would be the amount of depreciation that you have to charge. Clear?
Yes, ma'am.
Note this down. Total cost of machinery was 20 lakh. Out of that, cost of the machinery which we sold off, we'll remove 7,50,000. So we'll be left with the cost of remaining machinery, which is 12,50,000. Now we are following straight line method. So straight line method, we applied the depreciation rate given on the original cost. So on 12,50,000, 10%. 1,25,000. This depreciation you write here, 1,25,000. Now done. Nothing else left. Close the accounts. So first the machinery account will close. 20 lakh. Write it on the credit side. And write by balance. Carry down. 7,50,000 removed. So 12,50,000. That is the value of the machinery, remaining machinery account on 31st March. And then close this account. 9,25,000. So it will be to balance, carry down. How much? 25,000 is gone. 7 lakh. So provision for depreciation account has 7 lakh balance. Is that clear?
Yes, ma'am.